Alright guys, so welcome to another one. This is going to be a lesson on order flow, and as you can see we have a trend, a bearish trend to the downside, and what we are looking for is just going to be sells. So let me explain to you how it is that we are going to use order flow to our advantage. And as you can see, I've marked out our most recent high and a supply zone in which we expected price to turn around from, causing a new bearish move, right? So two things that I want to explain to you guys is, in order for a powerful, or in order for a high probability setup to occur, we need to first have a break of structure into the one side. Doesn't matter which time frame it's on, we need to first have a break of structure into the one side, and then we need to have a change of character into the opposite side, right? So these are the two things that makes a high probability setup, and price also needs to create some liquidity. Liquidity is also a high probability setup. So once you see, identify that price has created some liquidity over here. As you can see, there's some consolidation over there. We can expect a high probability setup to occur, right? So, but in this case, price never reached into our zone again, which would have been from the most recent high to the most, let's say, to the most recent low. Price never reached into our zone again. But not to worry, I'm going to teach you how we can catch our trades. Doesn't matter if price does not reach our setup. Our job as traders is to follow along what the market does, not what we want it to do. And I'm going to teach you how to use this to your advantage on the lower time frames, right? So for now, we have our most recent high. And like I said, in order for a high probability setup to occur, we need to have a break of structure into the one side and a change of character into another direction. Right, so this is on the higher time frame, like the 1 hour time frame. So we have marked out our most recent high, most recent break of structure, and our most recent change of character as well, right? So like I said, our job as traders is to follow along what the market does, not what we want the market to do. So immediately after we saw that price has broken structure into the one side or changed character into a different direction, so I'm just going to stick to the change of character. I'm going to leave out the break of structure. Reason for being is that we expected price to turn around from here and cause a new bearish move. So what we would have expected at this point in time, right? So is price to pull back to the downside. It caused some liquidity, swept the sell side liquidity, and then we would have expected price to retrace back into our level before continuing to the downside, right? So that's what we expected from the market. However, in this case, price never went back up into our zone. Price never tapped back into our zone before continuing to the downside, right? So this would be our supply zone, and from there we would have expected it to take a contract or execute a contract to the downside, targeting the most recent week lows, right? So not everything in the market is gonna go according to your setup or is gonna follow your strategy, right? So that is why I say our job as traders is to follow what the market does, not what we want the market to do. So as you can see, price never came to mitigate our zone. This is where price is currently. This is live market data over here. However, we do expect price to come back into this level and then continue to the downside if it doesn't reach where it wants to go first, and then we can expect to take a trade to the downside again, right? So if price reaches here before reaching wherever it wants to go, we can expect to take another trade to the downside. But however, if price reaches to the downside first, then continues back to the upside, this level would be valid to some extent. However, it would not be valid to target the weak lows that got put in place, right? So from here at this point in time, we would have expected price to tap back into our zone, and we can clearly see that price never tapped back into our zone. Price just continued going to the downside, creating more liquidity. Then it took out the sell side liquidity again, and over here we can see that price is creating more liquidity to the sell side. Right, so now we have 3 sets of liquidity on the higher time frame that needs to get swept on the buy side, right? So we're not going to focus too much about buy side liquidity that needs to get swept. For now, we can clearly see that we are in a downtrend, and let me show you how to use that to your advantage, right? So since price swept our lows, on the higher time frame, what we are going to do is we are going to take our Fibonacci from the most recent level to the most recent low, from the most recent high to the most recent low. You can either pull it from this one over here or this one over here. Doesn't really matter. And then we are going to jump down to the lower time frame. The reason why I'm starting with this one is because from here we would have already expected price to retrace into our zone, and we can see that price never retraced into our zone, but that's no matter. Let me show you how we are going to use the liquidity to catch trades on the lower time frame and what to expect on the lower time frame before we take any buys, knowing that price has to buy. So from the 1 hour, let's go down to the 45 minutes. Let me just remove the kill zones. Alright, so 45 minutes, let's jump down to the 30 minutes, 15 minutes, and then let's go down to the 5 minutes for more of an idea to what price is doing. Okay, let's start from the top here. And so as traders, like I said, our job is to follow along at what the market does. Our job is not to expect price to do anything. Our job, we can just hope that price reaches our zones. As traders, we can't tell the market what to do. It's not our job. Our job is just to follow along at what price does. Right, so we can see from here at this point in time on the lower time frame, we can clearly see that price is starting a downtrend. However, we are not too sure at this point in time yet if price is going to continue to the downside or if it's going to turn around somewhere in here and continue back to the upside, right? So once you hit to the lower time frames, we can mark out our change of character, our very first change of character. As you can see, this over here would be our very first change of character. Then price dips or grabs liquidity. Price just grabs liquidity on the buy side. Right, so let's call that our liquidity taken. Price grabs liquidity and then creates another break of structure to the downside, right? So at this point in time, we are already looking for a short position, targeting the most recent lows, but we are not going to hold anything from here. We are not too sure if price is going to turn around from here or if price is going to go back up, taking out the most recent highs, right? So but from the first change of character to the most recent break of structure, we can already identify that price is now in a slight downtrend, and what we are looking for at this point in time is to target the weak lows before anything else, right? So this is called a flip zone, and from here it makes things a bit easier for us to trade from. A flip zone makes things a bit easier for us to trade from because it's the second break of structure after the first change of character. So what we are going to do at this point in time, if we are looking for a lower time frame trade, we're going to pull our Fibonacci from the most recent high to the most recent low. As you can see, we have our 50% zone over here, and then we have our premium zone over here. We're going to mark out our entire premium level as well as the candle. We're going to pull the candle across, and we can see that price mitigates our zone, and then price takes out our weak lows over here, causing another break of structure to the downside. Let me just put that in there. Right, so price targeted our weak highs from here, from our supply, targeting our weak lows, and that would be our take profit for that would have been our take profit for the flip zone. And then as we go slightly to the right over here, we can see that price has taken out our previous low, causing a break of structure to the downside. So immediately at this point in time, what we would expect is for price to create some liquidity. And as you can see over here, price created some liquidity from the most recent high to the most recent low. Price created some liquidity. This entire level over here is liquidity. I'm just taking the most last 2 weeks, the most recent last 2 weeks. And then from there, we would have used our Fibonacci from the most recent high to the most recent low. We would have marked out a level in which we think price might retrace. Call that our supply zone. Pull that level across, and then we see price never mitigates this level and just continues to the downside. And as you can see, we have another break of structure to the downside. Price never mitigated our supply. Price just continued going to the downside over here, causing another break of structure. Meantime, we still have liquidity that needs to get swept above. Price never sweeps that liquidity, causes another break of structure to the downside. Then price forms some more liquidity over here, and this is on the lower time frame. This is price creates some more liquidity over here. However, this is also a low. So as soon as price turns around, we mark out our most recent low and our most recent high from the retracements. So this over here would also be considered a low. Then price creates another break of structure, and we are still looking at liquidity that got put in place, right? So from this point in time, since price created a break of structure over here, this is not a level that we would look for a trade from, because we know that above here is still some liquidity. So if price was to come back, we would not take a trade from this zone, because there is still some liquidity above that needs to get swept. So once price reaches this zone, we can expect a small retracement before price continues to the upside and then taking out the new lows. And in this case again, price never tapped into a supply zone. Price just continued down from there. I would not consider this a supply zone. Just because there's a break of structure doesn't mean that's a supply. We still need to identify where there is liquidity, and then price breaks structure on that liquidity. So at this point in time, what we would be looking for is a level. Since I want you guys to look at something over here, since this break of structure occurred over here, price never retraced into this zone. Price broke this low over here as well. So at this point in time, this would still be a valid zone to me. However, this would still be a valid zone to me. However, I'm going to ignore this zone for now and move on to the next level because of the second break of structure, and because I'm on a lower time frame, I'm going to ignore this break of structure over here and move on to this one, because now price is telling me that it's not ready to come up to this level yet. Price is not ready to come back up to that level yet, and it's going to start working from here. So what we are going to do at this point in time, since price broke structure over here, some nice momentum, what I'm going to do is pull my Fibonacci from the most recent low to our most recent high to the most recent low. Let's make the low over here, because this would be a slight retracement before a continuation. The low, this would be more advisable. Okay, let's pull it to the most recent low where price stopped and actually turned around from. So let's pull it from here till here. Price actually turned around from here. So as you can see, price dipped into the low over here and then created some buy side momentum, which was more than 5 candles. So that is a valid retracement to me. However, we still have a level. Since price broke structure over here, price retraced into a level somewhere over here before continuing to the downside. So this would have been a valid level after the break of structure. Price created another break of structure over here, which is a minor break of structure, lower time frame break of structure. Price retraced into this level. Let me remove this. Price retraced, immediately retraced into the level and then continue to the downside. So what we are going to do at this point in time is we are going to mark out our premium zone. Let's remove the previous supply. We are going to mark out our premium zone, and if you look slightly over here, so this candle over here is also considered some kind of a supply, this candle over here. Right, so now we have two supply zones in one. If we went over to the 15-minute time frame, let's see if we can get it. If we went over to the 15-minute time frame, as you can see, this entire candle over here, so it's important to use your time frames to your advantage. So the 15-minute time frame is within a supply zone and it's an entire wick. So if I was to go back to the 5-minute time frame, I would just use there we go. So if I was to go back to the 5-minute time frame, I would just use this small piece of candle over here, as it is a valid supply zone. Pull that level across, and as you can see, some people would have considered this a slightly missed trade. Price just missed their trade and they wouldn't have been in. And like I said, I'll show you how to use order flow to your advantage. So you're not just going to stick to one time frame. So some would have considered this a missed trade. However, if we was to go over to the 15-minute time frame, we can see that it was not a missed trade. This was actually a perfect trade to enter from, and we would have targeted the weak lows over here. As you can see, price slightly taps into our zone before a retracement back to the upside. Right, so once again, this is not a missed entry. Use the 15-minute, the 5-minute and the 30-minute to your advantage when taking entries. So if we went over to the 30-minute time frame, we would have saw nothing, no supply zone over there. Let's see if we can see a supply zone on the 45 minutes maybe. On the 45 minutes is the same thing. Right, so guys, so this is all liquidity that we are trading. So you must know how to read the markets. You must know how to read the markets in order for you to catch minor trades or scalping trades. So this would have been scalps that we were looking for. This wouldn't have been serious trades. So knowing that price never came back up to mitigate our supply, we would have just been taking scalps until we saw a move into the opposite direction and then a flip zone that we would have taken a trade from to the buy side, right? So like I said, this was not a missed trade. On the 15 minutes we have a clean entry and we have some liquidity over here as well, and from there we can target the weak lows or the lows that got put in place, which is this over here. Stop loss slightly above the high or slightly above the order block, and we can see that this would have been a nice run or a nice scalping trade. Liquidity got taken and this would have been a nice trade, right? So if you look slightly to the right over here, we can see that price has shifted. Price has also shifted its direction, causing a change of character on the lower time frame. Right, so price has either shifted its direction over here, causing a change of character on the lower time frame, and then internally on the 5-minute time frame we have another high or another change of character. Right, so these are scalping trades that we would have taken. We wouldn't have been holding these. So two changes of characters on the lower time frame and one higher time frame. So what we would have done at this point in time is maybe look for, since we have a change of character, you're not looking for a trade to the buy side because we know that price is in a downtrend. So we are not looking for trades into the buy side. We are just looking for sellers. And at this point in time, we would have marked out a Fibonacci from the most recent high to the most recent low. And then from that level, we would have seen price dip into, let's mark out our entire premium zone. Right, so price taps into our level. At this, I would not take a trade from here. I wouldn't have taken a trade from here just because of the fact that I'm not looking for any buyers. The only way I would have taken a trade from here is if we have our change of character. That is one thing checked off my list. I'll mark out my most recent high and my most recent low as well. So let's mark out our most recent high and our most recent low, and let's see which one gets taken out. So this would have been my most recent high, price retraced over here. This would have been my most recent low over here, and then we can see now, because the other moves are all internal, all these moves are internal, I would have not considered any of these a true break of structure. So these are all internal moves, so we are already on a lower time frame. Any moves within that time frame or within that say from here to the most recent low, any moves within that is all internal moves on a lower time frame, right? So if price never broke structure to the upside or to the downside, I would not trade in any of that because this was our most recent change of character into the upside. Price never again broke this low over here or took out the most recent high over here. So price never took out this high, price never took out this low. Price just liquidated in here. So none of this I would have considered a break of structure or a change of character. And then over here we have our high marked out and our most recent low marked out as well. Price changed character. This I would have considered a change of character because this was my most recent low before price retraced back up, tapping into a zone, taking out that previous low, and then as well price swept liquidity on the previous low as well. So we call that X, liquidity taken becomes X. And then we can see that, let's use our Fibonacci, the most recent low. And then we can see somewhere along this level over here, price retraces into a zone of supply. Price retraces into a zone of supply. And then from there we would have taken another trade to the downside, targeting the most recent week lows. And then the same thing goes for other trades on the lower time frame. So price took out the low, and this is the higher time frame change of character that we are now working with. Price never came back to our supply over here. Price just continued breaking structure to the downside. Over here we have some liquidity. As you can see, price formed some liquidity on this level. Let's pull our Fibonacci from the most recent high to the most recent low. Or let's pull it from the most recent high to, let's say, this low over here. Right, so Fibonacci is not always going to be accurate. There are times when it is going to make you believe that price might not tap into your level and then continue to the downside. However, in this case we can see that from this high to the most recent liquidity high, before price breaks structure again, we can see from here to here that it is liquidity. So some of these setups are just models instead of It's just models instead of the strategy that we are using. So everybody gets a chance. The market basically gives everyone a chance to use their own strategy. The market gives everyone a chance to use their own strategy. It's not always going to be in our favor. So it's not always going to be in our favor. And then if you guys look slightly over here, I want to show you guys something over here, which is something I said in the beginning as well. So first, in order for a powerful move to occur, we first need to have a break of structure into the one side. In this case, we have a break of structure into the sell side. Guys, so I apologize for that noise. So once again, we have a break of structure, and like I said, in order for a powerful or high probability setup to occur, we need to have a break of structure into the one side and a change of character into the other side. However, in this case, we are still looking for sells. We are not looking for any buys, but I want you to look at this. So first we have a break of structure into the one side, a change of character into the other side, and then price retraces. Right, so if it was to use our Fibonacci, retrace it from the most recent low to the most recent high, and then follow along to see what price does. We can see that price taps into the most recent high for a take profit. Right, so once again, these kinds of things make for a high probability setup. As you can see, price takes out or sweeps liquidity, and we also call that our take profit. Liquidity taken becomes X, and somewhere in here, if we used our Fibonacci, we would have seen price tap into this level. Stop loss goes below the previous low, and we would have targeted our most recent high for take profit. Right, so these things make for high probability setups. First, we want to get a break of structure into the one side, then a change of character into the opposite side. You mark out your zone of supply or demand. In this case, it's a demand zone. And from there, we would have targeted the most recent highs. I'm sure if we went slightly to the right, we can see price drop again because it's still in a downtrend. As you can see over here, price drops, takes out the previous low, and then just continues to the downside over here. So this is live market data, so I don't see too much from here. So let me just explain to you guys what's happening here, and then I'm going to end off the video. So I'm sure you guys have seen these kinds of models before. Price sweeps the upside first, taps into the downside, and then continues to the upside. So these are called ICT buy or sell models. They look something like this. These are called ICT buy or sell models. So you have liquidity on both sides. You have liquidity below as well as liquidity above. Then you can see price first sweeps the upside or buy side liquidity, and then comes back down to sweep the sell side liquidity before continuing to the upside or to the bullish momentum side. So this is currently what's happening over here. And if we was to mark out a zone of demand, we would have had a trap over here. Slightly over here, we would have had a trap, and then we would have been stopped out over here because our stop losses would have been slightly below the previous low. And then we would have went ahead and targeted, because price is in a downtrend, we always target the order block or the level in which price changed character from or broke structure from. So our TP would have been somewhere over here. Since this level over here is our first change of character, we would have just targeted the level where the change of character occurred for our take profit. And the way you are going to do this is you are going to wait for price to change character to the upside again, you are going to wait for price to change character to the upside again, and then you can either take your long position from here, you wait for the slight retracement, either going to take your position from here, targeting the level, stop loss below the most recent low. As soon as you will lock in some profit, you're going to move your stop loss into break even, let it play out, and you would have seen the run may not have been as long, but you would have still profited from this zone over here, since we know the ICT buy or sell model. If you guys check out my Instagram, I'm going to put it in a link below. If you guys check out my Instagram, this is where I explain all these kinds of models in picture form. So I'll show you how it should look, what to expect from it, and how to execute these contracts using the ICT or supply and demand buy or sell models. So as you can see over here, liquidity below, liquidity above, price takes out the buy side liquidity, then proceeds to take out the sell side liquidity, taps into a zone of demand. If we took our position from here, we would have been trapped, stopped out. We would have been stopped out from this level. However, since we know what is going to happen, we would have taken another position from a short retracement over here. So it would have been somewhere over here that we waited for price to retrace into, and as you can see, this whole candle over here, this whole candle over here is where price tapped into. As you can see, price taps into this candle, and we would have taken our position from here, targeting the change of character on the first change of character from where price turned around from. Soon as we locked in profit or caused the break of structure over here, soon as we caused our break of structure over here, we would have waited for price to retrace and then continue to the upside before moving our stop losses to break even, making it a risk-free trade, targeting our change of character position, and then we would have had a nice solid trade into the bullish direction. And then as you can see over here, we have something similar. So we have a push to the upside, taking buy side liquidity, price pulls back into a level somewhere over here, then continues to the upside. So what we expect at this point in time is for price to either, we expect price to either take out these highs and continue to the upside, or we expect price to continue to the downside, taking out the previous lows and then retracing back to the upside and then breaking structure to the downside again. And so I hope you guys understood what I said in this video. I know there were some bumps along the road in this video. I'll try my best to edit them out. I hope you guys understood what I said. I'll add a link to my Instagram in the description below. I'll add a link to my Telegram where I share my setups for free. And I hope you guys enjoyed. I hope you guys learned something from this video. I'm going to see you on the next one. Peace.